Okay, folks, so we've got lots to talk about. First, we got to give an update on the market in plays, including one high conviction play of ours that just exploded today. Why is it running? Should you add more? And what is going on? And then lastly, we need to talk about what Cathie Wood over at Ark Invest has been buying like crazy, as well as what she has been selling, and I think you're going to want to hear this. And the only thing that I ask in return for all of it is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, Marquetta, very nice risk on trading today. The year-end rally folks have certainly been winning the argument thus far, at least for the last couple of weeks. And you've seen some of the biggest effects in the growth sector, with small caps far outpacing the rest of the market. Just look at Roski or Ark. But let's get to business. Our Lucid play almost hit 40 today. That was quite the turnaround time. This is as positive press coverage for this company continues, and Lucid confirms that deliveries are beginning. Probably largely propped up by a lot of FOMO buying from folks that didn't want to buy it at $15 a share just 2 months ago because they read an article from a short seller telling them that that would be a massive, massive mistake because Lucid would never deliver a single vehicle. This is actually a company that has production capacity, has a competitive vehicle, and is actually fulfilling their promises of delivering vehicles like we've been saying all year, and a lot of you guys have been with me on that. Now, if you haven't had a chance to watch our Why This Will Go Up 73% video on Lucid that we released on Tuesday, I explained that Lucid is worth $45.59 at fair value based on the deliveries that I expect them to meet. Sure, it can run the gamut of a range between fair value at 45 and euphoric at 91, but the no BS fair value price if they meet deliveries, in my view, is at least $45. Obviously, lucky timing. When I released that video, I was making projections based on deliveries they were going to do in 2022, and we hit most of the way to my price target this morning. But this is a play that we've held conviction in FUD in favor, and you have to respect that when you look at a run like this. We put the work in so many times this year at so much lower values. The key at the end of the day with trading, especially swing trades to longer term trades, is putting the work in to find companies you like, analyzing them to find their fair value, and then putting them on a watch list and saying, okay, well, when it gets dramatically below my fair value, I'm going to buy it, and when it gets dramatically above it, I'm going to sell it, or when it meets the fair value, I'm going to sell it, depending on the market condition. So anyways, shout out to you if you're somebody who believed in Lucid, whether that was earlier this week, whether that was at 15 bucks a share, or whether that was much earlier in the year at different price points. At the end of the day, this certainly wasn't a short-term runner like DWAC, which we brief on at like 12 bucks a share. It runs up to 175 2 days later and then dumps back down to 73, but still a massive, massive rally. It's not the same type of trade. With DWAC, the reason that we briefed on it was because it had characteristics of a short-term sentiment runner based on hype. I saw small cap SPAC trading near its SPAC floor. I saw Trump, and then I saw Trump's massive following and the fact that there wasn't really much ability to short the stock. And I was like, okay, well, hey, this has a very strong chance of booming. But with great volatility comes great responsibility, right? In comparison, a play like Lucid are ones that you literally can go and value the company itself, wait until it's at a price point that you think is very, very undervalued, and then you can just hold it through FUD in favor and not care about where the price is going. So it's a completely different mindset, because in one situation, you don't care at all about the company. You're just trying to trade off the sentiment hype, which is very, very short term and very, very fleeting. And in the other situation, you're saying to the market, hey, I don't care what you think about this company. It's undervalued. I'm going to wait until it's valued properly. Both have their different appeals. Certainly one has a much higher opportunity for fast profit, but at the same time, also fast losses. I would almost speculate, and you might agree with me, that the average person, if they just bought the dip on really high conviction plays instead of chase the hottest runner, they'd probably do better on average. Now, if somebody's very, very smart with chasing the latest runner and they're able to lock in profits quickly instead of just holding because they have to wait until it gets to the moon, then maybe the numbers would start looking a little bit better. But still, you get my point. Now, in terms of Lucid's future, well, the next catalyst is November 15th, when Lucid will be reporting earnings. We should get an update on how many vehicles they produced, the cost to do so, and guidance for the upcoming quarter. But now we get down to the practical. Should you buy this if you didn't buy in earlier this week, if you didn't buy in early September at 15 bucks a share, if you didn't buy in the summer? Is it too late now to buy? Well, my answer is, quite frankly, it's not the ideal time to buy, because we're coming off of a massive uptrend of euphoria and awareness. My price target for fair value in 2022 is $45. So the risk versus reward here isn't great, especially considering, again, it's being pumped by the latest media cycle. So I'd say, quite frankly, hey, wait for the dip. This is going to be a great company in 2022. We're going to start seeing in quarter one, quarter two, how well their demand is being met. and perhaps it could even go closer to that euphoria price target, but we'll see what happens. In terms of other EV-related plays, our EVgo play also did very well this morning, 10% up. ChargePoint saw more inflows. Fisker up today. Very, very nice. I think the market is looking very, very favorably on EV and EV-related companies, specifically because of the massive, massive inflow into Tesla and proof of concept there. They're trying to find the next one, and they're trying to recognize that, hey, this is a very, very fast, very, very quickly growing industry. Okay, so what is Cathie Wood doing? Let's go ahead and start with her sells. Now, remember, Cathie Wood's strategy is kind of similar to what we preach on the channel. I'm sure she's been doing it for longer. She's got about 40 years on me. But her strategy is finding high conviction plays and buying overreaction dips and selling overreaction euphoria rallies. We'll start with her offloading of Tesla, which the media loves to report on because she gives huge price targets for the company and then she offloads it, and the media's like, she doesn't believe in her own words, and they don't look at how much money she has invested in it in her funds. But anyways, she has been indeed consistently selling Tesla this month, accelerating recently thanks to the recent breakout. Why does she do this? Well, I think she's in the situation where she's trying to keep the weight of Tesla stock down in her portfolio, and Tesla stock keeps rallying so fast that she can't offload it fast enough. Now, why would she try to cut her winner short? Well, because it's already the biggest holding in her portfolio, and while excess helps bolster Ark's performance during uptrends, if she overexposes herself, then if Tesla has a few bad quarters, then her fund isn't going to be adequately diversified. The fund's goal is to invest in innovation, not just Tesla, and this has allowed her to lock in some profits during its uptrend. If you actually look at her trades compared to the chart, the green dots show when she's adding and the red dots show when she's selling. The purple line shows the amount of shares held, the yellow line shows the price of the stock. You can see that when Tesla is doing well, she tends to start offloading shares, and then when it does poorly, she buys back in a lot more vigorously. That way she's able to exploit arbitrage in her highest conviction plays. She's also been a bit paper handy on Coinbase with several days of sales since October 11th. This is one of her top holdings. Yes, Coinbase has been on a solid uptrend, but she was a bit early on buying it, which is why I'm surprised she's selling now instead of later. She started buying aggressively in the weeks after IPO as it sold off from hyped up highs. If there's one thing I wish I could ask Cathie Wood is, why the hell do you buy so many stocks at IPO? I agree with a lot of what she does, or at least I understand the argument for what she's doing, but when it comes down to buying stocks after IPO, you want to wait a while. You want to wait for that hype to die off. That being said, it's certainly possible that she's trying to balance the scale again with weight, still at number 3 in terms of total holdings, so perhaps she's trying to offload small bits of it. Another big sell, though, is Pinterest. This one I think she took a big L on. Pinterest has just been a disaster this year. You could tell she's been trying to offload shares all year. And then they had like a 2-day catalyst run when rumors came out that PayPal was going to acquire it. And then when it came out, it wasn't true. It just plummeted, and she sold more after the plummet. So I think she took an L here. I think this wasn't the play that went the way she wanted it to go, so she's selling out. I've seen her dip buy worse setups, so if she's not dip buying this despite the dramatic downtrend, she probably has lost conviction in the play. Now let's look at her buys. So a frequent buy as of late has been the hood. From October 25th to the 27th, she's been aggressively buying it, with some of the biggest share counts happening yesterday and the day prior. Why? Probably because she's bullish on the business model of robbing the hood. Just kidding. Kind of. She's probably buying on the massive dip on earnings. A little known fact about the trading niche is that generally you have the biggest boom in trading and account creation at the start of the year. Somewhere around January, February, and March, when everybody's getting interested in the stock market. Maybe they have New Year's resolutions. For whatever reason, they're more interested. The stock market tends to be a little bit better in terms of performance. It's also true that viewership on stock trading channels like this one tend to get a lot higher during that beginning of the year. But I think that she's making the judgment that, hey, right now they're in the worst part of the year for trading. And so she's probably thinking, hey, I'm going to buy it when earnings are bad right now. And then by Q1 and Q2, when earnings start going up again and user growth starts continuing, then she'll see an increase. Obviously, a lot of retail traders in these communities hate Robinhood and would never buy it. But I'm just trying to tell you what I think her thought process is here. She has also been buying skills as of late with 6 separate orders over the last couple of weeks. I gave my thoughts on that recently in a video breakdown, dramatically undervalued in my opinion. She's also been buying 2 social media companies that are on similar setbacks because of Apple's privacy policy screwing up their ad targeting. Those 2 are Twitter and Snapchat. So here's the thing. Both of them are dealing with what we could call a data gap. Generally speaking, ad spend is so profitable for social media companies because they can really target the hell out of their customers, knowing that, wait a second, we have all their personal information on these platforms, so we can know exactly their gender, their age, where their location is, their race even. With Apple's new privacy policies, it's becoming very, very difficult to target. And companies like Snapchat and Twitter have had a very, very difficult time adapting to that. Google has had less of a difficult time because Google has mostly its own ecosystem, but Snapchat and Twitter don't. Now, I think that she's thinking, hey, wait a second, these two companies are going to bridge the data gap. Companies are already working on in-app solutions to use data from these platforms and user behavior to bridge the gap that Apple has created. So I think that Cathie Wood is making the bet that, hey, these companies aren't going to be in their mini adpocalypses forever. She's also been buying a lot of Triple D as of late, which has been stagnating, at least in price. This is also one of my favorite 3D printing companies. Yes, they haven't been moving much as a stock, but the company has been working quite hard. They just announced a very recent acquisition of volumetric biotechnologies, for example. Insiders research are showing that hedge funds are taking an increasing number of positions in this, suggesting perhaps more inflows towards the end of the year. The last one that I want to bring to your attention is NNDM, Nano Dimension. Now, Nano Dimension has had a very, very tough year as a hyper-growth stock, and she's been very slow on adding since May despite the continued dip. However, she, interestingly enough, has just started putting out more orders, and her level of shares has only increased despite the relative pump and dump in pricing. My thought process, I think she's anticipating a bottom and is loading up on this play as a longer time horizon play. Most of Nano Dimension's industry growth show their exponential opportunity closer into 2024, 25, and 26, and I think she's making the bet now before their upcoming launches in 2022, 23, and 24 that it's going to pay off. So anyways, very, very interesting to look at her trading behavior. If you want to look at this yourself, you can go on, what's the website? Yeah, Cathy'sArk.com. I'm not affiliated with them in any way, shape, or form. It could be led by somebody really crazy. I don't know. Whatever. Just go on there. They have a lot of free information. You can look at what she's trading. I believe it's updated every single 24-hour period when she posts. You can see each of her flagship funds and weights, trades, trends, and performance. So I think it's very interesting. Check it out if you're interested in what she's doing. Anyways, folks, that's it for today. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our private chat, our daily morning briefings, as well as our step-by-step lessons, where we will walk you through everything that you need to know in order to learn how to better trade and manage your account in the stock of market, well, we'll go ahead and put a link to ZipTrader you below. This is not the type of course where you can buy it and get away without doing any work. This is something where you're expected to put a ton of work in and effort to get any sort of result. When I buy something, you better bet that I get every single dollar worth out of it. And I expect the same from you. Anyways, have a good one, and I'll see you in the next video.